Stocks see a strong rally led by financial and IT heavyweights, even as realty and autos are the soft spots. It's the mid-caps which take a breather at the index level, but doing well from a broad market perspective.
Bajaj Finance and Bajaj Finserv climb after Money Control reports that the financial services major is likely to float an IPO of its housing finance arm with valuations pegged at 19-odd billion.
Dr. Reddy's gains on inking an exclusive deal with Sanofi to distribute its vaccines in India, while Wockhardt jumps on an expected reduction in debt and gains from new molecules. But Alchem slips following a 10 US FDA observations for its unit.
ICICI Securities slips after institutional shareholders push through its merger with ICICI Bank, but VIP Industries jumps after the company guides for strong and more profitable growth. GCL Corporation leaps on striking a mega land sale deal.
India getting into hardware after software is the most exciting thing, says emerging markets investment guru Mark Mobius. Also lists out 3 stocks that he's upbeat on: Tips Industries, Wari Renewables and NetWeb Technologies.
Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra. With me is Manglam Malu. Well, it is the last day of the week.
Yes, it is the last day of the week. It was a short week and we're happy for that because it came after a 3-day long weekend and we're wrapping up this week with a 3-day long weekend as well. The market's doing extremely well.
Yes, absolutely, Manglam. But I just want to burst your bubble because next week onwards, we do have earnings season starting. And we also have the RBI policy. So we have a whole week of heavy queues, not to mention that April 19th onwards, we will be busy with the election. So this is probably the last week of maybe just a little bit of relaxation.
You shouldn't have said that, Ekta. Well, but, you know, be that as it may, because it's the last trading session of FY24, looks like the markets want to go out on a big bang firework announcement for this year itself. Up 200 points for the Nifty, nearly 700 points on the sensex. The mid-cap index, now you would say that it's not doing as well as the frontline indices, which have moved by about 1%, but the broader markets are telling you a totally different story. Almost 1,600 stocks in the green for just about 670 stocks in the red. And even as the mid-cap index is underperforming the frontline indices, it's been a late starter. It's moved higher. So let's see where the second half of trade takes it. And importantly, we'll have the expiry play out too. So all these factors will keep our markets pretty abuzz throughout today's trading session. But in that, a bunch of stocks which are in focus are the pharmaceutical stocks. Ekta, Dr. Reddy's, the top Nifty winner today.
Well, yes, Dr. Reddy's is in focus because they've entered into an exclusive distribution partnership with Sanofi Healthcare, which is the unlisted arm of Sanofi, for their vaccine brands in India. So Dr. Reddy's has announced that they will be distributing and marketing Sanofi's brands in the India private market. As per the deal, Dr. Reddy's will have exclusive rights to promote and distribute these brands, which are both pediatric as well as adult vaccine brands, while Sanofi will own, manufacture and import these products. The combined sales of this is 426 odd crores. Dr. Reddy's has said that it is going to propel them in the vaccine market. They don't have a hold in that. They'll become the second largest player when it comes to that. And it has the opportunity overall for them to expand the market, considering that the marketing reach of MNCs is limited. Now, assuming 426 crores in terms of sales, Nuvama has written a note and they've said that the deal would contribute to around 1.5% of Dr. Reddy's revenue in FY24, and it will add around 3.3 to 3.3 rupees in terms of EPS for Dr. Reddy's, and the partnership on a domestic business basis is around 9% in terms of sales. So that's how lucrative it could probably be. I just want to point out that while we're talking about Dr. Reddy's, and yes, it will give them a foothold in the vaccine market, Sanofi has struck 3 deals just in the past 2 weeks. Remember that they've operated in India, Manglam, since 1956. And in the span of just 2 weeks, they've struck 3 distribution deals. One with Dr. Reddy's, one with Cipla for their central nervous system brands, as well as with MCure for a whole clutch of brands as well, cardiac brands. So that's the kind of strategy shift that we're seeing Sanofi undertake. And yes, Dr. Reddy's is, benefiting on account of it.
Indeed, Ekta. So that's, big stuff taking place in the pharmaceutical space. more so from a Sanofi standpoint, and then the beneficiaries, as Ekta pointed out, in the last 2 weeks itself. The other one that I'm looking at is Aegis Logistics. I think we're in today's trading session alongside a lot of stocks which are seeing high single-digit to low double-digit sort of gains. This one's up 12%, and that's a move that can be attributed to IIFL Securities initiating coverage on the stock with a buy rating and a target price of 500 rupees, which implies a further 60 rupee upside even from current levels of 440 after a 12% move that we've seen. Their thesis is pretty simple. It's a formidable player that the company is in both the liquid and gas cargo logistics, with nearly 2 million kiloliters liquid logistics capacity and almost 10 million kiloliters or 10 million metric tons per annum capacity for the gas business at 7 key locations. They've consistently earned about 60 to 90% EBITDA margins for both their liquid/gas storage business. And through FY26, they believe the volumes of the company, the throughput volumes, could register a growth of nearly 17 to 35%, leading to almost 19% yearly profit after tax growth. Why is that? Because one, the company's already done a fair amount of capex. The second is that they will do more capex over the next couple of years to the tune of almost $500 million. 83% increase in their liquid handling capacity, 104% increase in their gas handling capacity, and that would mean more throughput volumes for them and at their margins higher profits as well. Importantly, the induction that the company has done of Vopak, which is a global player in this space itself, of a 49% stake in some of their key locations, is a step to de-risk its operation and also bring in some more global expertise. And with all of these, the stock is trading at an attractive valuation, so that's the positive thesis of it all. The only risk is delay in any sort of project completion, because their model is built on timely completion of all the capex plans that the company has done with increased volumes. So any delay in that may perhaps derail some of their estimates, but nevertheless a positive note coming in.
Okay, Aegis Logistics has bounced 12.5%, 13% in today's trading session. Thanks, Mangalam, for that. We'll take a short break, but on the other side, we'll get you an exclusive conversation with Shashank Srivastav, who's the Senior Executive Officer, Marketing and Sales at Maruti. Stay tuned.
Well, a big up move is what we're seeing in a couple of these interesting names. We have the metal stocks which have been doing well lately. This month, Tata Steel is up 10% and looks to end this month with a bang as well, up around 2% for that, counter at the high point of trade. And the other one is a couple of names from the FMCG pack which have been meandering up and down. Yesterday, the FMCG stocks were lower, but today we have Nestle as the top Nifty gainer. Among the top Nifty gainers, HUL2 has moved to the high point of trade as well. So we have a fair mix of movers coming in from a lot of sectors. Speaking about sectors, the hospital space has been in focus. This morning we spoke with the management of Walk Hard as well. Ekta, what's the insight that you got from Abil Khorakiwala?
Well, yes, they've concluded their QIP, so they've raised over 400 odd crores. Now, one of the reasons for the QIP was to reduce debt, so they will be paying 100 to 110 crores of debt. Domestic debt will reduce on the company. That is what Mr. Khurakiwala told us. Now, the QIP funds will also be used to complete their phase 3 clinical trials of their novel drug under development, WCK-5222. Now, more than 60 patients are covered in the phase 3 of WCK-5222. They have said that they will file WCK-5222 in other markets and they expect approval by 2026. Now, overall, first, the priority market for WCK-5222 as well as WCK-4873, another novel drug, is emerging markets after India. So, they'll first file in India, then they'll look at emerging markets. They will also look to seek global partnerships with global pharma companies once the trials are complete. So there's a lot of promise from these drugs because, they've been used on a compassionate basis and they've given good results. So I think the street is quite hopeful on it. They also expect sales from Emroc, which is Emroc and Emroc O, which is a certain antibiotic which they launched in the Indian market some time ago, to touch around 100 crores of sales. So they're doing around 70 crores of sales from that. Financials, they will need additional investments when it comes to the launch of these molecules, and hence that could pressure margins initially. They expect to be profitable probably by the second half of FY25. Margins overall should improve as compared to FY24 and FY25, but again, investment in molecules will take up some of the money. Margins should see improvement after launch of WCK-5222 and 4873 in India. So there is maybe some gestation period there. Maybe there could be profitability in the second half of FY25. But the key point with regards to Wockhardt is what happens with these key novel drugs which are in their portfolio currently.
Absolutely. Thanks a lot for that. That's about Wockhardt. Let's get in the bites coming in from Habil F. Khurakiwala, who's the chairman of Wockhardt, who spoke with us this morning to discuss the fundraise and all the other things that Ekta just spoke about.
I think one of the purpose of this QIP was to reduce the debt, and about 110 crores debt, which is there in the Indian books, external debts, will be paid. The other important use of the fund would be for my R&D program for 5222, which is in phase 3 clinical trial. We intend to complete this sometime early next year and then file it globally in US, Europe, and all other countries in the world. Our domestic debt will come down other than working capital to zero. With that, we have only another debt at bio level, which is about $25 million that will remain. Okay, 5222, we expect the phase 3, which is more than 60% patients are covered, to be completed sometime early next year. And then we will be filing later part of the year to US, Europe, and other countries for approval. And we expect the approval to come sometime in early 26. Emroc O is we introduced some time back. It was an improvement on existing treatment. And we expect sale of something of the order of about 70 to 80 crores this year of Emroc, and it will touch triple figure following years, more than 100 crores. One of the things is there will be initial investment required to launch these new molecules also during the current year. The impact of margins coming out of after the launch of both these molecules in India in next 12 months, 5222 and 4873. And one would see a significant increase in margin coming up in the following year, 25-26, and we would show a good profit during that year. Once we complete our clinical on phase 3 clinical on 5222, we would be seeking a partnership with the global pharma for the Western market like US and Europe. And simultaneously, we will be applying for the registration of this molecule.
All right. So that's some interesting conversation coming in from Habil F. Khurakiwala. Let's talk about ABB India. That's moved higher at the high point of trade, doing extremely well. But before that, let's go across to Parikshit. Parikshit's with us. He's joined by Shashank Srivastav. So that's the promised conversation that we've lined up for you today.
Right. We have seen how Maruti Suzuki is now India's 19th listed company to cross 4 lakh crore in market capitalization as the company's shares surged 23% in 2024. The company sold over 1.63 lakh vehicles in the domestic market in February, and total production was over 1.7 lakh units. Maruti Suzuki has exceeded expectations in Q3 of FY24 as it saw a 33% increase in net revenue driven by a 60% growth in the premium utility vehicle segment and strong export performance as well. The company has also launched a campaign for strong hybrid vehicles. Let me go across to the head of sales and marketing, the senior executive officer at Maruti Suzuki, Shashank Srivastav. Mr. Srivastav, as we come to the end of this fiscal, how do you expect the industry to grow over FY23, and how do you expect Maruti Suzuki's performance, if you could give us a percentage in terms of growth that you're expecting?
So for the industry, it's been a very good year. Expected overall sales in the entire fiscal year 23-24 should be around the 42.3 lakh units. This compares favorably with 38.9 lakhs that we saw last year. That's a growth of almost 8.8%. And for Maruti Suzuki, of course, we expect that our growth will be higher than this growth. In other words, we will gain market share by the end of this fiscal. We've already gained some market share thanks to our newly launched SUVs. But I think by the end of March, you will see that our growth much faster than the industry.
Right. So could you just give us the industry growth once again, sir? And what do you expect Maruti Suzuki's growth to be like?
8.8%, I said, would be the industry growth. And Maruti growth would be higher than this. I can't really give you the exact number. It could be market moving. So, but our growth will definitely grow much faster than the industry.
Okay. Now, let me ask you about the consumer sentiment on the ground, especially when it comes to entry-level vehicles. Does the sentiment on ground continue to be muted? Are you seeing a drop in sales of entry-level segments?
Yes, so for the entry-level segment, the sales still remains muted. Remember, just about in 2019-20, the small cars, the hatches contributed about 45-46% of overall sales of passenger vehicles. That fell to almost 30% last year, and currently this year it's around 28%. So yes, we have seen that continuous decline largely because of the affordability factor coming down. And we do expect that in a couple of years, in fact, 2026, second half, that we see a rebound there. But you are right, we do see on the ground, the sentiments for smaller hatches still continue to be muted.
Right. Now, what has been the drop like in terms of the percentage of sales of entry-level vehicles in your entire portfolio?
So if you look at the overall degrowth in the industry for small cars, hatches is about 12% negative this year so far, as compared to, and it's a 6% negative for sedans. It's a plus for SUVs, almost 26% plus for SUVs. For MPVs, it's a plus 16% and about plus 5% for the vans. Overall, as I said, expected about plus 8.8. So largely the growth has been driven by the B segment vehicles, the SUV and the MPVs, as you can see from this data.
Okay. Now, speaking to you about utility vehicles, some of the utility vehicles in Maruti's portfolio have not been performing very well, especially if you look at Jimny. Could you give us the numbers for the Jimny in January and February?
I think just short of 1,000 numbers. That was the number, wholesale number. Of course, as you must have
for both months together?
No, separately.
Okay.
I don't remember the exact number. I think it was 700 in one in January and about 600 something in February. But the retails are a little better. And if you see, for example, in December, we had a high stock of Jimnys, and we could, thanks to our strong sales promotion scheme, we could cover. The retails on that month of December was about 4,500 Jimnys. So after which, of course, we are now producing vehicles exactly as per the requirement. And I think once we see this stock coming down, it has already come down quite a bit. and then we will see a much better number for the Jimny. So far, the Jimny, it was launched in June. We have sold about 18,000 vehicles in 9 months, 9.5 months. So roughly about 1,900 a month has been the average for the Jimny so far.
Right. But is this a number you're satisfied with the sales of the Invicto and the Jimny, or you feel that there is some correction that Maruti Suzuki will do in this range?
So Jimny, when we started off, we got a very good booking. By the way, we had almost so far booking received is 52,000. But we saw some cancellations once we actually introduced the vehicle in June. Remember, the booking started in January. So our expectation, because it's a niche segment, our expectation was between 2,000 to 2,500 vehicles per month. And from the bookings which came in, it did look that we'll probably exceed that. However, what we realized is that that in our country, this culture of off-roading, and remember, Jimny is a pure off-roader, it's available only in 4x4. This culture of off-roading probably will take some time to develop, and that is why we have shifted our focus for the Jimny to actually do experiential marketing. In other words, try to build that culture by actual usage. Because there were suggestions that you could reduce the price of the Jimny by introducing a two-wheel drive vehicle. We considered that suggestion, but came to the conclusion that because of the global legacy that the brand is known for its off-roading, pure off-roading capability, we would not introduce the two-wheel drive version. And that is why we have now wanting to develop this segment. It may take a little while, but I think we have to do that basics now of developing that segment.
Currently, rural versus urban, what is the sentiment like, and what is the kind of outlook you would have for both rural and urban sales for the coming few months?
So rural continues to do well. In fact, so far in this financial year, April to February, rural growth is around 11.7% against a urban growth of about 8.3%. I'm talking of Maruti Suzuki figures. As a result, because of this higher growth compared with the urban growth, our rural share of the overall sales have gone up a little bit from about 44.5% to almost 45%. So that's been the growth. And also in the industry, the growth has been higher, and it has grown from 31% of the industry to almost 33% now. So I think it's been positive for the rural areas, especially because of the heavy investment the government has been making in infrastructure in rural areas. Also, the monsoon, which was a little bit of a question mark because of the El Nino effect, has been, while 6% down over the long-term average, still considered to be normal. Kharif crop output has been about 4% down, but Rabi sowing so far has been on the positive side. So overall, the sentiments look positive for the rural markets today.
Okay. Now, in terms of the order book that you're sitting on currently, what would it be like?
It's about 240,000 odd vehicles. Which has come down over the previous months, as you know, because after the semiconductor crisis got over, we've been able to supply much larger numbers, thereby reducing the waiting period for most of the models now.
Okay. In terms of the outlook for sales for the coming few months as we enter this election season, are you expecting moderation in growth going forward? Do you think maintaining this growth figure is going to be challenging over the next few months and in FY25?
Yes, I think in the FY25, that is the fiscal year 2024 to 25, we expect the industry to grow single digit. And that is because the base effect is pretty large now, the 42.3 lakhs, which I mentioned, which we will end this fiscal year with for the industry. Also, remember that there is a partly the pass-through of the of the repo rate increases, which we saw in the past over 250 basis point, hasn't yet been built fully in the auto retail loan rates. 130 basis points have been carried forward, and I think 120 basis point we can expect further increase. Remember, the auto loan rates are come with a lag after the repo rate increase. So even if the inflation comes down and the repo rate goes down later on, it will take a significant time for it to be reflected in auto loan rates. So as a result, because of these factors, the sticky inflation, the expected increase in auto loan rates for some time before they come down, has resulted in the industry saying that probably this year, on a strong base, the growth might be a little muted in single digits. Also, remember in last fiscal year, when we started the month, the industry had a very low stock level, about 200,000. That has built up to about 300,000 this year, because this is a more normal level of stock in the industry today. The OEMs had the luxury of wholesaling the vehicles, even if the retail didn't happen. So far in this year, the retail lag expected in the whole year would be about 100,000 units. So 42.3 lakh is the expected wholesale, but the retail is expected is only about 41 lakhs. So that luxury of
Right, so interesting conversation there with the management of Maruti. 42 lakh personal vehicles sold this year for the industry. Maruti itself expects to grow almost 8.8% or over 8%. The industry is expected to grow 8.8%, even as the overall industry for hatchbacks degrew by about 12%. They saw an increase coming in from their SUVs and multi-utility vehicles. The stock markets rewarded Maruti fairly well as well for the same. Over the last fiscal, the stock is up over 53% and very close to its record high, a level just over 13,000 rupees per share. So big mover out there, and good conversation coming in as well. Take a short break, come back, get you more on the markets. Aditya Agarwala of Invest for Edu joins in with some trading strategies. Remember, it is the expiry session. Welcome back. The Nifty holding well above that 22,350 mark. The Midcap index doing well. It's increased its gains from the time we started the show. In fact, the market's at the high point of trade right now, with the Nifty Bank up around 1% as well. Good time to look at what the session has been so far. It's the expiry session, the Nifty Bank, Midcap index doing well. And in this move, the Nifty is just about 0.75% away from a fresh record high, 200 points away. We have the Nifty Bank as well, just under 3% away from a fresh record high as well. Let's see where we go in the April series and whether there is a fresh record high on the cards for the April series. A lot of triggers, as Ekta pointed out at the start of the show as well, where we have the general elections starting. We have the results season along with the RBI policy next week too. Active Nifty options today. With the up move that we've seen so far, 22,300 put writers have gone ahead and written that put with a fair amount of aplomb, hoping that 22,250 to 22,270 would play out as an important support in today's trading session. So the 22,300 put comes up for you on the screen. However, the market, we don't know yet whether it'll cross past that 22,400 mark formidably or not in today's trading session. That's why a lot of the writing has taken place in the 22,400 call. But as the Nifty moves higher, you see some short covering take place out there as well, with unwinding of positions and maybe unwinding of some punt buying that took place in yesterday's trading session as well. Fresh longs added only on Bajaj Twins. We've seen a lot of long positions being added on a lot of stocks, but that could also be on account of expiry where they're rolling their positions on. But in terms of an open interest jump, we've seen Bajaj Twins stand out a fair amount. So we'll watch out for that too, Ekta.
Yes, absolutely, Mangalam. Well, we have Aditya Agarwala joining in to discuss the technicals of the market. Aditya, hi, welcome to the show. Well, it's a stable market for us today, and for the week as well, we've done pretty well for 3 days. Nifty is up around 1%, mid-cap index has gained around 1.5%. How would you approach today's trade?
Good afternoon, Ekta. Good afternoon, Mangalam. Thanks for coming to the show. Today's move is actually a bit of a surprise because we were facing stiff resistance around that 20 DMA mark, which was around 22,170, 22,200 on the upside. And on the downside, clearly 21,800 to 900 was acting as a support. Mind you, we're still in that range between 21,900, 800 on the downside and 22,500 to about 600 on the upside. What has happened today is that range has shifted towards the upper end of the zone, and I believe now on the downside the 20 DMA will act as an immediate support for the market, which is 22,200. And as Mangalam also pointed out, there's a good amount of shorting that we are seeing on that at that strike rate. So I believe 22,200, 250 will act as an immediate support now, and on the upside markets will make a dash towards 22,500 to about 22,550, which was somewhere around the previous peak. I don't see a runaway rally yet in the market. I believe markets will remain in that range, give or take another 100 point up and down. Overall, I believe markets will remain in that range. What is interesting to see is Bank Nifty is participating today. Usually, Bank Nifty underperforms, and now the Bank Nifty is sustaining above 47,200 mark. If it does so comfortably, then there could be a case for a further leg of up move in the Bank Nifty and can test levels of 47,500, about 400. I believe large caps will continue to outperform. Broader markets are chipping in, but one has to be very selective and stock specific there because volatility is going to rule the markets this coming expiry, which is April month.
All right. And your stock picks would be what?
I've got a couple of buy recommendations, Mangalam. One has to be from the Bajaj twins, good short covering rally, good long build-up rather, I would say. So Bajaj FinServ is looking very interesting on the chart setup. It's broken off from that good consolidation phase on good volumes. So one can initiate a fresh long even at current levels if you missed out on that morning trade. At current levels, initiate a fresh long for a target of 1820, 1850 on the upside with a stop loss at 1570 on the downside. The second stock recommendation is V-Guard. This is again one stock which has been outperforming the benchmark indices and the broader markets. So I believe there is one more leg of up move left in this stock. At current levels, one can go ahead and buy the stock for a target of 370 on the upside with a stop loss at 320 on the downside.
All right. Thank you for joining in, Aditya. Wish you a happy long weekend. And thereafter, as Ekta pointed out, the grind starts again with a lot of long weeks, not a lot of holidays until the 1st May, if I can remember correctly. Take a short break, come back. We'll continue our coverage on the paint space. Yesterday, we spoke with the management of Berger Paints. Now, today, we are joined by AkzoNobel, the makers of Dulux Paints, on how demand is right now and how rising competitive intensity in the sector could be something that they would watch out for. Welcome back. Now, for a while, we've been speaking to a lot of players in the paint space itself. And today, we have the management of AkzoNobel joining in. Before that, some important news at the bottom of your screen coming in from Kotak Mahindra Bank, an acquisition that they've made. Sonata Finance is the company that they've acquired for about 537 crores. It's a 100% stake that they've acquired. The stock's been doing well since morning, continues to do well, sitting with a gain of almost 0.75%. But it's a small acquisition given their size, 537 crores, 100% stake in Sonata Finance is what they've acquired. But let's talk about the paint space itself. Birla Opus recently announced its prices for its paints foray, stated the products are priced at a 5% discount to the leader, and they will also give an additional 10% quantity to dealers across the company, across stock keeping units. We discuss how this will impact the paint industry and what the incumbents are doing already. This morning, there was a note that came in from AkzoNobel saying that they've appointed a new brand ambassador as well. Rajiv Rajgopal, who's the chairman and MD, joins in to give us more details on the paint sector as a whole and as they see it. Thanks a lot, Rajiv, for joining in. Now, AkzoNobel has been a global leader, has been in India for a while, but, just been among the top 5 players, top 4, 5, with you having the aspiration to go to top 3 as well. What do you think have been the challenges for you scaling up in India, and what should the incumbents, or rather, what should the new disruptors be prepared for?
So good morning, Mangalam. Good morning to you and Ekta, and thank you for having me on your channel. I think this is some of the questions that have been sort of put to many players in the industry. So first, from AkzoNobel perspective, you're right. AkzoNobel acquired ICI in 2009. The journey, as you've seen over the last almost now 14, 15 years, has not been an easy one. Of course, I joined the company in 2013 and did a 2.5-year stint and came back in 2018 to assume the current role of MD and recently got appointed as the chairman and MD. So let me quickly run you through our learnings of what we believe it is. Look, I think this industry is a fairly consolidated industry. It's quite a disciplined industry. And I must give credit to all the players, including the market leader, who, despite all the aggression in the marketplace, have pretty much kept it. If you take a 20-year time frame or a 10-year time frame, the positions haven't changed. We are the number 4 player in the decorative paints part of the business, with a market share close to approximately about 5%. Overall, we've got, because of our higher shares in the coatings business, we've got a share of close to about 7-8%, right? So that's pretty much as far as the business. Now, the drivers of the paints business are basically brand, distribution, our ability to connect with painters, and our ability to really start looking at innovations which are really going to be path-breaking. Now, if you look at any one of this, these are not things that get done overnight. In my prior experience, I worked for a telecom, one of India's largest telecom companies. And I can say that, look, when you put a massive capex, you can drive revenue growth. I was in a circle which from a number 3 position, we had moved to leadership. And I understand that story because you can drive consumers, you come with a better brand, the product is the network, right? And with a better network, you can get it. It's not so simple, really, in the paints industry. Yes, there are ways to nudge and move it. And also, directly spending on advertising doesn't necessarily mean that it gives you a right to win in the market. However, we've moved slowly. If you look at India and break India, because, India is a large market. And you break it into almost about 700 districts that we have. Let me tell you, what may be surprise to you, Mangalam, is we actually, despite being number 4 overall, we are actually a market leader in almost about 56 to 60 districts in the country. Market leader means number 1, right? Where even the market leader in some markets have been a challenge. And this has been done over a period of time, right? And it's been difficult to dislodge us despite a lot of competitive pressures, good performances, challenges in execution, excellence, etc. However, our challenge has been, we have been very strong in our tier 1, tier 2, and, the challenge has been really going down. And, to build that distribution, we moved to a distributor. We've got about 160 distributors now covering almost, 75% of the business on the decorative paint side. It's not been an easy journey. It's not something which you can say on and off because you've really got to understand the nuggets of it. Look at brand. While Dulux, when I came in, one of the feedback we got is Dulux is no longer seen as innovative. How are you moving the needle? We worked a lot on it. If you look at premium, we still have almost a 16-17% market share. And you can argue 2 and 3, but we are pretty much in the top 2, which gives us a right to win. Why? Because we believe we've got the best-in-class quality, international. We understand color expertise, both globally, internationally, and in India like no one else. Right? And we believe that, look, on the other levers, we started moving significantly from almost 1,500 towns in 2013 to almost close to 5,300 towns. And as I speak, moving, it's not something that you can switch on, switch off and build within a month or 3 months.
Okay, that point is taken, Rajiv. And, this is a similar sentiment that we got from the management of Berger Paints as well yesterday, that it's difficult to move market share, which has been established over many years. But in that context, are there any strategies that the company is going to undertake, maybe a further price cut in order to just secure your competition, secure yourself within the market, or probably even increase advertising expenditure?
So, Ekta, look, I think price helps in certain price-sensitive segments of the market. And really, as far as we are concerned, we are a little, if you look at the mid-market, we are underrepresented. We've got about a 2.5% market share. So we've got a long way to go. So pricing is a very, is not something which is really dramatically going to move the needle. We already, unlike some of the other players, already at a premium compared to the market leader and most of the other players in the industry. So really, we're already there because the quality of products we offer is the real challenge. So coming to your second part on brand, yes, today I'm delighted that in the morning we announced rocking star Yash onto the brand. We believe that, the commercials that is going to come over the weekend, in the next few days, on Dulux Weather Shield Powerflex, which is one of our flagship brands and innovator on the exterior, with its powerful, its colorful, its powerful campaign, is going to pave the way to see how we are getting ready in building our ammunition to make sure that we continue to grow our market share in the already intensified and competitive, industry. So that's what we are doing. We are going to fortify our brand. The teams are already working on distribution, and we are looking at scenario planning. I'm fairly confident. Yes,
right.
We need to be careful, but I'm fairly confident that we will be able to hold our own, given the fact that we've been able to do it over these many years.
All right. So we get that every other player is trying to secure their own position and confident about their own customers, etc. as well. So just a final question before we let you go, and this is a two-part question. The first one: with this aggression coming in from a new player, do you expect scaling for all the other players to be a little difficult because everyone's chasing the same distributor, the same customer, the same ecosystem, so to say? And as a result of which, do you think margins for the industry will structurally be capped right now?
So I would like to sort of break it into two parts. From a very, very short term, not immediate, right? I think that by the time the new entrant scales up, it will take about 6 to 9 months for us to really see it. So we are going to really see it in the next fiscal second half, really. So this question in the next fiscal second half is something that we really need to be look at. Maybe there would be a marginal sort of an impact, really. There would be an impact because obviously each player will try to heighten its A&P spends, try and make sure we are not losing market share. And as a result, yes, to answer your question, there would be an erosion of a couple of points on your EBIT margin. That, I think, is something that one has to mentally prepare for. But I think everybody is going to fight and protect his or her turf.
All right, an erosion of a couple of percentage points of margins for the industry. Wish you good luck, Rajiv. Thank you so much for joining in, and we will continue to speak about your plans to become number 3 from number 4, a position that you've been for about 20 years as well. That's about Ekta.
Yes, absolutely, and a comprehensive take on the entire industry that, you're so well entrenched over years in terms of the kind of distribution that you've set up that you're probably not going to see a dent in terms of competition. Maybe volumes would come down by 1%, no pricing change as of now. That's the word which is coming in from the paint companies. We need to take a short break, but up next we're going to be talking, as we slip into a break, we have a big announcement, however, to share with you all. We're launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do, whether you're in your 20s, 30s, or even 40s. This live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to cnbctv18.com, and we'll see you on the 11th of May. Welcome back. Doing well for the markets. 22,415 is where the Nifty is at. We have the Midcap index, which is up over 300 odd points as well. The Bank Nifty doing well with a good gain of around close to 550 odd points. So stable session for us, ending the week as well as maybe the expiry session on a positive note. Advanced decline ratio positive. Well, let's focus on VIP Industries. The stock is buzzing in trade today, up over 13% earlier this month. We spoke with the MD of the company about their business outlook, rumors of a stake sale by promoter, and the market share. Listen in.
Industry is expected to grow handsomely, close to 15%. Most of the reports are talking about it, and they are talking about this 15% growth for next 3 to 5 years. I definitely believe that we have to grow 2 to 3% more than the market growth, and that's what I will be doing. In fact, my success will start from Q4. So Q4 we'll be doing a double-digit growth after a long time. It's like after 4 quarters. Next year, first quarter, it will have no BCG cost, and therefore that itself will give us some margin improvement. You will start seeing it from Q1. So my first aim is in FY25, I should reach around 14%, which used to be our margin earlier. And then journey to 18 will take maybe 2 to 3 years. It might happen, but it's maybe 3 to 5 years away because it's for the succession planning, which he has always been saying. But today it's not, and it is clearly visible because he has started buying from the market. So why will he buy if he has to sell? I have not heard about any offer having come. I think at this point of time, he's quite confident that I should be able to turn around this business in next 2 to 3 years. And if at all he wants to sell, he will see after that, nothing before that. Definitely, we have done quite a lot of back-end work, and I believe from here on, I should first get to 40.
Okay.
And then maybe 43, between 43 to 45.
Okay.
Very difficult to put a number what I will do in next 3 to 5 years, but my aspiration would be to reach 45.
All right, time for a quick break. On the other side, Manisha Gupta will join in with Peter Maguire of XM Australia.
Welcome back, and joining us on the show now is Peter Maguire. He's CEO XM Australia. Peter, hi, welcome to the show. It is all about gold, isn't it? Because we're inching back towards $2,200 per ounce, and this is ahead of the US inflation data that comes in tomorrow. It also is a long weekend, not just in India, but most part of the world. How are you looking at the gold support coming in right now?
Well, I tell you what, Manisha, and greetings from Sydney and happy Easter to everyone. 22.17. I think there's every chance you could see it move up a little bit from here. You've got the FX markets open tomorrow, and it's end of week, end of month, and end of quarter. Don't be surprised to see volatility through thin trading. So there's the first side, and I think gold, I wouldn't be surprised to see it push up from here. Certainly in April, I think we'll take out records. So that's where it's looking.
All right. Peter, what is the kind of participation that you're seeing in the markets right now? Is there a short squeeze that the market likes to believe that it is? Or do you see, apart from central banks, hedge funds and ETFs also now getting into this bull run?
I think everyone's getting in. I mean, central banks certainly, hedge funds are jumping all over it, retail traders, certainly the man and woman on the street as far as buying physical. And it just seems to be, we're hearing what's happening as far as Raphael Bostic from the FOMC. You've got probably one cut. You've got Wallace saying it's going to be pushed out. 9 of the 19 are saying you're going to see 2 cuts or less this year by the Fed, Manisha. So inflation, I think, is still very sticky, very, very sticky. And that's one of the great attractions for gold.
Peter, what's your own sense on where the prices are headed now? Because, most of the forecasts on the street now are talking about 2,300, 2,400. I've seen reports of 2,700 on the higher side as well. And all of that within this year in 2024. Wow. What is your own forecast for this one?
I told you, and I'll say it now publicly, I said I wouldn't be surprised to take a 25 handle out sometime this year. And I probably revised that down to maybe a 24, but I think it's got the capacity, Manisha. It's so hard to really put a forecast as a number, but there's just so much momentum to the upside that I think that gold's really going to shoot high in the next 3 quarters. So you've got big elections coming up in your own country and, of course, the States. So I think there's going to be a lot of turmoil. You've got geopolitical pressures. It's nearly a perfect storm, Manisha, for gold to trend higher.
And Peter, what about the physical buying then? Because in the Indian markets, we do know that for the month of March, the imports have seen a decline almost by a 70 or 80%. Physical buying also seems to be going lower now because of these all-time high prices and very volatile prices. It's not a festival or a wedding season here. So physical demand in the Asian markets for the month of March at least could take a hit. Going forward, of course, as the wedding and the festival season comes in, people will buy even if in smaller quantities. How are you looking at physical buying outside Asia? Because India will see buying, yes, next quarter. China is buying in huge numbers, central bank and retail-wise.
Absolutely. I mean, globally, Manisha, there's a very strong attraction. If you strip Asia out, of course, and the likes of India and China, I still feel as though that will resume. It's probably just a bit of choppiness. There's also, you've had raging stock markets, and you've only got to see some form of correction there, and that'll even force more money into gold. So, there's only so much money that people have got, but I think that there's been such a big push-up also with crypto that's really attracting consumers, and I think there's going to be strong underlying buying moving forward in certainly second quarter and third quarter with festivals and just overall demand.
Peter, how would you look at silver then? Because that clearly has been a laggard. I mean, until now in this quarter, we've seen that outperform gold in some sense. But the kind of levels that people have been talking about silver, about 26 and 28 and 30 by the end of this year, what are your own charts telling you?
Look, I think it's got more upside than gold, Manish, and the reason why is because of the industrial demand, the undercapitalized essence of silver has been there's been no money thrown at it from a mining perspective for quite a while. I'm talking years, and I think the overall demand is going to be very, very strong for the silver market. So that's where I think that there's some incredible upside, and $30 seems very, very achievable, certainly this year, because there's just big demand, and I don't think that's going to wane at all.
All right, very, very bullish statements coming in for the precious metals, gold and silver. Gold, of course, could hit more higher highs, and silver as well. Nearly $4 and $5 from here on would be a good feed, strong feed actually, for the Indian markets as well there. Thank you as always, Peter, for joining us and throwing light on what really can be done in case of precious metals. With that, it's a wrap on Halftime Report. But Business Lunch will take all the action ahead.